And good evening, Hampton Roads. Welcome to another edition of Dollars and Common Sense, your local source for objective, unbiased financial advice. I'm your host, certified financial planner Kevin Zivna, coming to you live like I do every second and fourth Tuesday of the month to dialogue with you, take your calls if you have a question or comment relating to your own personal financial situation or anything I'm talking about here tonight. Jump on the phone lines. Give me a call, 627-7979. All we need is your first name, city you're calling from, and no matter what I'm talking about, if it's important to you, then it's important to me. We'll get you right on air, 627-7979. Wealthway Financial Advisors is the proud sponsor of Dollars and Common Sense. We are an independent registered investment advisor, which means we're legally held to a fiduciary standard to put our clients' interest ahead of our own in any business dealing or recommendation that we make. And that's the way it should be when you work with a financial advisor. As the premier financial planning firm in Hampton Roads, we integrate expert investment management with customized, ongoing financial planning advice to help our clients answer life's big financial questions and enhance their quality of life. So by design, we can't work with everyone. We work with a relatively small group of high net worth individuals, but that's one of the reasons we feel so strongly about coming here every second and fourth Tuesday at 6 p.m., and that's to reach out and help as many people in the Hampton Roads listening area that we can achieve your measure of financial success. Because it is a core belief at Wealthway Advisors that the overwhelming majority of people in this country have the opportunity for financial security if they choose it. And it is a choice because it takes some time, it takes some effort, and it takes some knowledge. We are here to help. You got to take that first step, though. Pick up the phone, give me a call, 627-7979. Whether you want to talk about anything having to do with the investment markets, the economy, insurance products like life insurance, health insurance, property casualty, taxes, tax planning, tax reduction strategies, retirement planning, retirement plans, 401ks, 403bs, TSPs, IRAs, Roth IRAs, mortgage options, Social Security claiming strategies, or estate planning, wills and trusts. All that and more falls under the umbrella of personal finance, and we are going to discuss tonight. Okay, we are comfortably in the month of November, and this is the time of year when most people start to look to make significant charitable donations around the holiday season. And let me just clarify, we are not in the holiday season yet. I'm a stickler for these things. First off, pumpkin spice season starts October 1st, no sooner than that. September belongs to summer in Hampton Roads. So pumpkin spice season begins October 1st. Then we wait until Halloween, and then we celebrate Halloween. Now that we've done that, we wait for Thanksgiving. And then we celebrate Thanksgiving. And then we get into the holiday and giving season of Christmas and Hanukkah and all the holidays there. But so I like taking these things one at a time and not rushing them. But I'm sure like a lot of you, you've seen the Christmas commercials already on TV right after Halloween. But this is the time of year that most people start to make major charitable giving donations. So that's what I'm going to talk about here tonight. Ways to gift smart for the holiday season. And we'll talk through some of the normal ways that people give and make donations, and then some of the more creative ways that people do it as well, and hopefully give you some ideas on how you might be able to enhance your charitable giving and benefit yourself at the same time with significant tax deductions if that is appropriate. All right, so let's start out with some of the basics, okay? Personal gifts, right? Giving money to somebody else during this holiday season. So obviously, almost everyone's familiar with the basic monetary gifts, cash gifts, checks. Nowadays, you can send money via digital apps like PayPal and Venmo, or even do some direct bank transfers from one account to another using, the bank transfer one.
Cash App?
Cash Out? No, there's another one.
Venmo?
No, it's one that goes right banks to banks. I'm blanking on it.
Zelle.
Zelle, that's it. Yeah, thank you. So monetary gifts directly to another person. So obviously, everyone likes cash, right? The ease of giving, immediate value to the recipient, and the simplicity in tracking for both giver and receivers. And one of the questions we get in our practice a fair amount is, how much can I give to somebody else without any tax implications? Like, how much can I give to my kids around this time of year? So the answer to that is any person can give to another person up to $19,000 in this year without any tax implications. That number is the same for 2026 as well. So $19,000 this year and $19,000 next year. And that number is set by the IRS, and it usually increases with inflation a little bit each year, although there'll be no change between 25 and 26. So you can, any one person can give to another person up to $19,000, no tax implications to the giver, no tax implications to the receiver. It's as if it did not happen. IRS does not need to know about it. That also means that a couple, husband and wife, can give $19,000 each to each one of their child. So that means a total of $38,000 a couple can give to one of your kids per year. No tax implications. Now, you're not limited to that $19,000. It just means if you go over that amount, then there is an IRS notice file that you have to file when you submit your taxes, because there's two ways that we can basically give things away: while we're living and when we're dead, and through our will or through bequests or some other or trusts. Some other mechanism, we can. Those are the two main ways that we can give money or items of value away. Unfortunately, the government, our Congress that sets tax law and tax policy, believes that we should only be allowed to give so much to another person before it starts to get taxed, and so that is the reason for these limits. Now, the annual giving exclusion, that $19,000 number that I gave you, no one is going to be taxed necessarily if you give more than that. But if you do give more than that to one person in a tax year, then you have to notice file the IRS so that your lifetime estate tax exemption is decreased. Because if you give too much away while you're living, then you can't give as much away after you pass away. Now, the number, without incurring an estate tax. Now, that number of the estate tax has been increased dramatically over time. So for most people, it's really a non-issue. Currently, the 2025 lifetime estate tax exemption is almost $14 million. So essentially your estate would have to be larger than $14 million to incur the estate tax. And then for 2026, it'll be $15 million. So if you give more than that 19, then you have to deduct some from that estate tax exemption. Again, for most of us, it's a non-issue, but there is that notice file that you're supposed to do with the IRS, and as a professional, I would recommend that you do that. But so there's the sort of the numbers on who can give how much to a person without having any tax implications. Now, that goes for monetary gifts. Now, there's also non-monetary gifts, right? Sometimes we can give away some personal effects like jewelry or art or collectibles, other personal possessions of value, maybe a baseball card collection or something like that. Now, technically, if it's of significant value, and I would say almost anything maybe over $1,000 is of meaningful value, you should have it appraised before you give it to another individual to ensure that there's a kind of a paper trail for how much it is worth. I'd certainly leave that up to everyone's discretion, whether that is ultimately necessary or not. A lot of these things have very subjective value, and it's hard to put a value on them. But almost every industry does have its own set of professional appraisers who can do a meaningful job of attaching some value to the transfer of non-monetary gifts. And then, of course, there's the sentimental value gifts, the items that might have almost no value to anyone except for the giver and the receiver. Always a good thing to get around the holidays, especially for those people who kind of have everything, don't need anything, don't need more socks or more underwear or coffee mugs or anything like that. Things of sentimental value give to family and friends. Those are almost always appreciated more. And then, of course, we have the old standby on the personal gifts, the gift cards and the vouchers, which are some of my favorite gifts to give because they're easy. My wife thinks I'm lazy and cheating. I feel like I'm giving the receiver options to pick what they want that's most important to them. So, of course, you can give the actual cards. Now you can get them in grocery stores. I think Amazon is almost like a one-stop shop now. The gift card to Amazon, you get almost anything you want there. That's another easy idea for gift giving. All right, we'll get into some more complex stuff and some more interesting things when we come back from this break. If you want to jump in on the conversation, 627-7979. I'm Certified Financial Planner Kevin Zivna. You're listening to Dollars and Common Sense on News Talk 790 WNIS.
Wealthway Financial Advisors, planning for life. Wealthway Financial Advisors, planning for life.
And welcome back to Dollars and Common Sense, your local source for objective, unbiased financial advice. I'm Certified Financial Planner Kevin Zivna, the president at Wealthway Financial Advisors, the premier financial planning firm in Hampton Roads, where we integrate expert investment management with customized, ongoing financial planning advice to help our clients answer life's big financial questions and enhance their quality of life. For more information about us, you can look us up online at wealthwayadvisors.com. All right, tonight we're talking about smart gifting strategies for the holiday season. And while, of course, a lot of personal gifts are made this time of year or getting ready to be made this time of year, also, this is a time of year when most people give the most amount of money to charities in order to help them with their cause. And so I know charitable giving is important to a lot of our clients, and I'm sure a fair amount of our listeners. So I'm going to discuss some of the different ways that one can give money and other items of value to charities. Obviously, the first and easiest one is money, direct donations in the form of cash, checks, and online transactions. We're all pretty accustomed to that. The importance of doing this, though, is to make sure that your charity is, in fact, a valid one that is actually working towards the mission that it sets out to serve. So most of us are pretty familiar with the big ones like United Way, the Red Cross, or here locally, the Hampton Roads Foundation. All those have been, large national organizations, or here regional organizations that have been thoroughly vetted through the years, have proven themselves through the years to provide good services for the work that they do. But there's also a ton of smaller little charities with maybe some dubious missions. So one way you can kind of check out a charity to find out if it's legit, or try to do your best to see if it's legit, is to go to guidestar.org. That's guidestar.org. And it's sort of like a clearinghouse of charitable filings, tax filings, their charter, some other sort of mission statement type of information, and that's a great starting place. So if you stumble across a charity that you haven't heard of before, but whose mission appeals to you, go to guidestar.org to check them out first, and that can give you a big jump to make sure that they are legitimate and that most of your money is going towards the charitable intent. All right, that's if you're giving money, but there's other ways you can help charity. In-kind donations, so goods and services instead of money, such as food, clothing, books. And here's one that we don't see that often, but is very valuable: professional services. So if you are, say, a lawyer or a doctor or a CPA, tax preparer, you might donate your time and your services to a charity in lieu of pay. And that also is a form of donation to a charity, and usually much appreciated for those targeted needs. And the benefits of that is it directly meets the needs of the recipients while providing valuable resources to the charities. And of course, there's volunteering. So maybe volunteering to do something outside of your area of expertise, donating time and skills to support causes and organizations. This highlights the value of time and expertise in addition to monetary contributions. So maybe helping to serve food in a food pantry, or helping to build a house for Habitat for Humanity, that type of thing. Volunteering time instead of money is also of great benefit to charities. So what are some of the ways that you can donate to charities besides direct donations? And I guess we'll talk about direct donations for a minute. I mean, everyone knows you can give like one time whenever you want, write a check. Nowadays, almost every charity has a website. Go online, donate directly. You can use your credit card. Money goes right to the source. It's very quick and easy to do it that way. You can even set up recurring donations. So instead of doing it just as a one-off, every month, say, on the 15th of each month, $100 to your charity of choice. And the charity likes the steady stream of the donation. The predictability of it allows them to budget and plan routinely. We have a lot of clients who do this for their churches, that they give once a month to their church on a regular basis, and so that the church can plan appropriately. Or sometimes one big lump sum on the front end is also of great benefit to a charity. Basically, charities will take your money however you give it to them, but some ways are better than others.
Can I throw one more at you?
Yeah.
Amazon. Another way to use Amazon is a lot of charities now have like a wish list on there where you can go directly and purchase goods that just get shipped right to the charity. So they open up a box and it says, from Tom is, dog food or whatever the charity might be involved with.
I like that. I didn't know about that.
At least that makes it a clean way.
Right.
And there's an easy track of it.
Easy, yeah. That's good. All right. Thanks for that addition, Damien. So a lot of times you can do this online. I was talking about charity websites. It's real easy to do it that way. There are also other crowdfunding platforms giving online directly to charities, and then the charity takes the money and does with that money whatever the charity thinks is best. But we're also seeing a fair amount of and these are legitimate, direct charity to individuals. So websites like GoFundMe, Kickstarter, Indiegogo, I wasn't familiar with that one, but similar to GoFundMe, for specific causes. So raising funds for a specific project, reaching a wider audience. So, a neighbor whose house has burned down or had a fire, suffered some sort of life event calamity like that, they can start up a GoFundMe website, or usually it's a friend or a neighbor or family member who does something like that, and you can give money directly to another person who is affected by something like that. And I think that's a great use of charity, directly to an individual who really needs it in a time of great stress in their life. So we got those crowdfunding platforms as well. Now, watch out for some of the platform fees. There's usually additional fees and expenses that go along with those. And then, yes, you do have to you're on your own to vet the legitimacy of that charitable request of those individuals. They will not show up on guidestar.org. I assure you that. Here's one of Wealthway's favorite ways to help our clients donate to charities, and that's a donor advised fund. I'm going to hold the bulk of this because we're going to run into the news break here pretty soon. But just to set the stage for a donor advised fund, it's a separate account that's usually set up with another financial institution or community foundation, such as the Hampton Roads Community Foundation, or it might be your brokerage firm like Schwab or Fidelity or Vanguard, or your mutual fund company has their own donor advised fund. So it gets set up with those a separate entity, and you contribute money into a fund that you control at that institution. Now, you don't own that money. Once you put it in the fund, it is gone, but you have control over it. I'll talk more about donor advised funds and why we like them so much at Wealthway for our clients when we come back from the news break. All right. Be back in just a couple minutes. 627-7979. I'm certified financial planner Kevin Zivna. You're listening to Dollars and Common Sense on News Talk 790 WNIS.
Wealthway Financial Advisors, planning for life. Wealthway Financial Advisors, planning for life.
And welcome back to Dollars and Common Sense, your local source for objective, unbiased financial advice. I'm certified financial planner Kevin Zivna, the president at Wealthway Financial Advisors, the premier financial planning firm in Hampton Roads, where we integrate expert investment management with customized, ongoing financial planning advice to help our clients answer life's big financial questions and enhance their quality of life. For more information about us, you can look us up online at wealthwayadvisors.com. Once there, you can request an information packet to find out what it's like to work with us, or sign up for a free quarterly newsletter at wealthwayadvisors.com. Just go to the Request a Consultation page, put your name and address in the dialog boxes there, select the appropriate drop-down menu, and we'll get that information out to you later on this week. And that's all we will use your name and address for, is just to send you the information that you request. Or if you have some nuanced questions, want to speak to a live human being, give us a call at the office, 757-456-2200. Want to remind everybody, our next live show will be in 2 weeks on Tuesday, November 25th. But if you can't catch us live every second and fourth Tuesday of the month at 6 p.m., get this show as a podcast. Search for Dollars and Common Sense wherever you get your podcasts. Download us, take us with you where you go, and listen at your convenience. And for those of you into social media, we are too. We have a presence on Facebook and LinkedIn. Search for Wealthway Financial Advisors. Once every week or two, we put up an interesting, informative financial planning post. All right, 627-7979. Tonight, we're talking about charitable giving. It's that time of year, and got some callers on the line. So excited about that. We're going to run out to Smithfield and speak with Joe. Good evening, Joe. You're on Dollars and Common Sense.
Hey, thank you. Can you hear me okay?
Absolutely, loud and clear.
Okay, I'm 63. I never heard about this until recently, but I'm sure you must know. Is that idea about you can make a donation, pull it out of your IRA from untaxed money, and when you donate it to a qualified charitable donation, QCD, the receiver's not going to pay taxes on it, so you donate that untaxed money instead of your other money, which is already taxed, and gives you a chance to make a better donation and then to make a better receipt. You can detail that, please.
Yes, and well, I said I could hear you loud and clear, but then some of that call broke up there, Joe. But I think I got the gist of your call, talking about qualified charitable donations directly from an IRA to a charity. Yes, that's another one of our favorite strategies that we like to employ with our clients at Wealthway. So you have to be a certain age to be able to do that, 70 and a half. right now, but once you reach 70 and a half, then you can donate directly from a traditional IRA to a charity. We use our clients have a special checkbook that they get assigned to be able to write checks off their IRA directly to a charity. And the advantage of that is that money never shows up as ordinary income. Well, and now that the age in which people have to start taking their required minimum distribution has increased to 73, there's a little bit of gap in there, but a great strategy to avoid taxation on required minimum distributions that you don't need is to donate it directly to charity, because we've done the math on this, and it's more tax efficient to give that money directly from the IRA to the charity than withdrawing it from the IRA, claiming it as ordinary income, then making a donation to the charity and trying to deduct the donation as a standard itemized deduction. Most people don't even itemize anymore. 90% of tax returns just take the standard deduction. So a great strategy there, Joe. Thanks for that information. I hope that was sort of just illuminating your point about qualified charitable donations. Thank you very much for that. Now we're going to go out to Virginia Beach and speak with Tim. Good evening, Tim. You're on Dollars and Common Sense.
Hey, good evening. Hey, the reason for the call, you were talking about a website for nonprofits to see if they're legit or not. Mm-hmm. I actually run a nonprofit. How does one get their information on this website? I took over this particular nonprofit about a year ago, and it has been created about over 20 years ago. But I never checked to see if that was that information was even out there for people.
So the name of the website, again, is guidestar.org, guidestar.org. Now, Tim, I assume you're a 501c3 recognized charity with the IRS?
Yeah, I'm actually a 501c7.
Okay. I do not know the distinction between the C3 and the C7, but I assume it's still...
yeah.
Go ahead.
Yeah, C7 is the one with membership.
Ah, okay. Interesting. Well, some of your information might be at guidestar.org already, because I do know it acts as somewhat of an aggregator. So your tax filings that you make every year have to be, I believe, publicly available. And then this website, GuideStar, goes through and sort of culls that publicly available information. And you may already have, your charity may already have a limited profile on that website that lists, usually it lists like the officers, the president, vice president, secretary, treasurer, the amount of assets, something to do with your, whatever sort of general information is on that tax return could be on that website as well.
Okay. Yeah, I haven't checked it yet, but no, I definitely appreciate it, and I will check into it.
And then I think you, sort of as the organizer, would have the option to maybe build out a fuller profile on GuideStar, put more information on the type of work you do, why it's beneficial, the type of maybe donors that you seek to attract, that type of thing. So it has base level information, and then you can expand that profile so that people who are looking for charities to donate to can find you and hopefully make donations to you as well.
Okay. I do have another question if you have time.
Sure thing.
I was always told I couldn't gross no more than $50,000 a year for being a nonprofit. Can you give me some information about that? Is there any truth to that?
Gross 50,000. When you say gross 50,000, you mean like revenue, donations?
Yeah, like taking in donations, whether it be monetary or services or even items that get donated.
I've not heard anything like that before. I mean, certainly there are plenty of charities that take in way more than $50,000 $1,000 a year. Now, I don't know if that's a quirk to the way you are structured with that C7 instead of C3, but no, I'm not familiar with that being a limitation.
Okay.
All right. Well, Tim, what's the nature of the charity? Why don't you give you a little shout out there?
Well, sure, if you don't mind. So it's perfect time too. So it's Tidewater Kayak Anglers Association, so TKAA, and what we do, we support kayak fishing, and our donation that we donate to is Heroes on the Water, which is they take vets that's dealing with PTSD, missing limbs, first responders, and they basically put them on the water free of charge, kind of give them some therapy site things. Last year, we were able to donate $10,000 to them. That funded them for the entire year. And we've been doing this for about 22 years.
Mm-hmm. All right, great. Well, that sounds like a fabulous cause, Tim. Thanks for that information. Hopefully I was able to give you a little bit of information, point you in the right direction as well.
No, I think you definitely did. I'm definitely going to look at it. Thank you so much.
Okay, thanks, Tim. Appreciate that. 627-7979. All right, before the break, I was talking about one of our favorite charitable vehicles at Wealthway that we recommend to our clients when they're ready to donate a substantial amount. So this bigger than the $100 check here, $200 check there. A donor advised fund is an excellent vehicle for people who are charitably inclined but may not know exactly which type of charity they want to give to or who they want to give to. So as I was describing it before the break, it's a separate account or separate fund that is usually set up by a financial institution or community foundation. It's controlled by you, the donor, but it's administered by the financial institution that sets up the fund. And so you would donate money into the fund, which you control. It's sort of like a separate account for you, but once the money's in the fund, it's gone. It is no longer yours. You have made an irrevocable charitable gift to a donor advised fund, and you get your tax deduction in the year that you make that deduction, that contribution rather. So the money in the fund can sit there for an extended period of time. I think is almost indefinitely. It can be invested inside the fund. So instead of sitting in a bank account or a money market account earning in today's interest rate environment almost nothing, but you can invest in it in stocks, mutual funds, ETFs, bonds, and so it can grow over time. And then you can take the time to decide where you want to take this money and make donations with it. And the idea would be that you don't give it all away in the year you make the contribution to the fund, that you would only give a portion of it and that it would grow over time to sort of be your own private endowment that you can use to fund the charities that become close to you without having to commit to any one in particular. And you can even add beneficiaries to the account. So when you pass away, your kids, if you chose them, could continue the charitable giving tradition. So it's an excellent tool to make a significant charitable donation, get the tax rate, and take your time to continue to vet more charities or talk to more charities or explore yourself what's close to your heart, that type of thing. So usually what we say by meaningful contribution, it's anywhere between like $25,000 up to, I would say, about $5 million. That would be appropriate for a donation into a donor advised fund. So again, bigger than the $100 here, $200 there, but you don't give it away all at once. You just put it in the fund, okay? And then it sits there, and you can invest it, and it grows over time. And so you have more money the next year, typically, and then 3 years into the future. And that means you can give more money away. And technically, there's really no minimum amount that you have to give each year unless the institution you set it up with has that parameter, and most of them do. So, but it's really a de minimis amount. So you could seed it with a certain amount of money each year for, say, 3, 4, or 5 years, and then start making significant donations. So donor advised funds, a great charitable giving tool that offers a lot of flexibility while ensuring that you get a valuable tax deduction, even if you don't have particular charities in mind at the time you set up the fund and make your contributions to the donor advised funds. All right, we're going to pause here for our last break. We'll be back in just a couple minutes. 627-7979. I'm certified financial planner Kevin Zivna. You're listening to Dollars and Common Sense News Talk 790 WNIS.
Wealthway Financial Advisors, planning for life. Wealthway Financial Advisors, planning for life.
And welcome back to Dollars and Common Sense, your local source for objective, unbiased financial advice. I'm certified financial planner Kevin Zivna, the president at Wealthway Financial Advisors, the premier financial planning firm in Hampton Roads, where we integrate expert investment management with customized ongoing financial planning advice to help our clients answer life's big financial questions and enhance their quality of life. For more information about us, you can look us up online at wealthwayadvisors.com. You can also request an information packet to find out what it's like to work with us, or sign up for a free quarterly newsletter at wealthwayadvisors.com. All right, next live show will be in 2 weeks on Tuesday, November 25th, but can't catch us live every second and fourth Tuesday of the month. Get this show as a podcast. Search for Dollars and Common Sense wherever you get your podcasts. All right, tonight we're talking about charitable giving, and I got a couple more strategies that I want to talk about before we wrap things up tonight. One we touched on earlier today with a call from Joe about qualified charitable distributions, direct transfers from IRAs to charities, which you can do beginning at age 70 and a half. And for those of you who are currently 73 or older and are subject to the required minimum distributions from traditional IRAs and the tax implications of those, you can donate directly to charities, all or a portion of your required minimum distribution, and shelter some or all of it from taxation and do good at the same time. So qualified charitable distributions, another favorite strategy of ours at Wealthway. In our particular case, how we administer it is with a separate checkbook that our clients use that is tied to their IRA, and then they just write the checks as they normally would write a check to a charity, and then it's automatically deducted from the IRA, and it's the custodian's job, the financial institution that houses the IRA. It's their job to, number one, give you tax forms that show that the deductions came from the IRA, but it's your job as the taxpayer, at least for right now, until the custodians maybe either get forced into it or the technology catches up, but it's the individual's job right now to verify or justify that they made the distribution directly to a charity. And so you want to get help with your tax preparer for that, to ensure that that none of that money that went from the IRA to the charity shows up as taxable income. Another favorite strategy of ours that we like to do that most people don't know about is donating appreciated securities. So these are donating the actual shares of stocks, bonds, mutual funds, ETFs directly from your brokerage account to a charity's brokerage account without selling them. So the advantage of doing that is ordinarily, like we're also used to and accustomed to donating cash, right? So, okay, I need cash. I'm going to make $1,000 donation to a charity. I'm going to sell some of my investments, and then I'm going to take that cash and I'm going to write a check and I'm going to give it to charity. But when you sell those investments, if they're appreciated, you're selling them at a profit. And if you sell them at a profit, that means you are subject to capital gains tax on that profit, which can be 15 or 20% if you're in a high tax bracket. So a way to avoid that tax is to not sell the securities and just transfer them from your brokerage account to the charity's brokerage account. There's obviously some administration involved. There's usually a different form. You got to have a moderately sophisticated custodian and a moderately sophisticated charity to be able to receive them. And then once the charity gets the shares of the appreciated securities, they turn around, sell them almost immediately because they do it under their tax-protected status. There is no capital gains tax. They get the full value of the securities when you donate them, and you get the full charitable deduction of the value of those securities when you donated them, and no tax is incurred. So another tax-efficient way of donating to charities that most people don't know about, but you do now. Okay, how much time I got left?
A minute and a half.
Minute and a half. All right. I can't let today go by without recognizing Veterans Day. I think it's one of the most important holidays that we have throughout the course of the year, and so I'd like to just say my little piece here, a thank you to our veterans, and that today is one of those days we pause to honor the men and women who have served in our nation's armed forces, those whose courage, sacrifice, steadfast commitment have preserved the freedoms that we too often take for granted. And so Veterans Day reminds us that liberty is not free. It has been earned and defended by generations who have been willing to put service above self. And to every veteran, whether you served in times of peace or conflict, at home or abroad, our deepest gratitude is with you. Your strength, your discipline, your sense of duty continue to inspire us all. May we never forget the example you set or the debt of gratitude we owe. Thank you for your service and your sacrifice for helping to make America the greatest country on earth. I'm Kevin Zivna. I'll be back in 2 weeks on Tuesday, November 25th. Until then, you've been listening to Dollars and Common Sense on News Talk 790 WNIS.